From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 14th, 2016. In just a moment, we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. But first, a recap of a couple of the trades suggested over the past few days. Starting here with the GBP USD, Greater British Pound versus the US dollar. We started selling all the way up here at the pink shaded area at the top of the chart. That was between 1.3315 and 1.3350. So between 15 and 50, the pink shaded area. As the market rallied back into that level, we looked for opportunities to go short. And of course, currently sitting about 150 pips of profit. We've seen a little bit more than that as it dipped deeper down into and challenged the 31.75 level into the orange shaded area here. If we could see the breakdown of this orange shaded area today, if we can get through 31.75, I think we're looking for more profit. We're looking for it to head back down into the 31.40s, 31.20s, the blue shaded area, or even deeper on significant movement. Could even see it back down into the 1.3 thousand. So I'm not really willing or ready, I should say, to give up on this trade or get out of this trade. Current stop loss, we've locked in 60 pips. I can't lose on the trade. Locked in 60 pips, closed 3 of the 5 lots that I started with here. So it's a great trade. Hopefully you've been able to take advantage of it. Moving over to the euro dollar, this is something that I just toyed around with a little bit yesterday. I have profit on the pound dollar. So I was looking for a little bit of a bounce from the support zone that we've seen here developing over the past few days on the euro dollar. The yellow shaded area that you see here on the chart, bottom of the blue box. Take a look at what's happened this week here on the euro. Not much at all. I mean, it's just been contracting, consolidating right here, right around the 1.123020 level. Just kind of been bouncing around for the past couple of days. It's kind of ugly, truthfully, here for the euro dollar. Of course, we have some news coming up over the next few days that could change all of this. News out of the U.S. S&B tomorrow morning may have some bleed over here on the euro dollar as well. So we'll definitely want to watch that. But at least right now, nothing significant happening here for the euro dollar this week. If you're uncomfortable with the trade, if you think, we're selling the pound dollar, we're potentially selling the New Zealand dollar, that's all good news for the dollar. That's dollar positive. If it starts to move dollar positive, of course, we'd look for the breakdown of this yellow shaded area. If you're uncomfortable with the trade, I'd say don't trade it. That's all there is to it. If you're comfortable with staying with it, anytime it makes some headway higher towards the orange shaded area, begin to protect some profit if you see it here for the euro dollar. If not, maybe stay out of it. A breakdown of the yellow zone, we're likely looking for it to go lower here for the euro dollar. Okay, coming over here to the NZDUSD, I want to start on a larger time frame here. One thing to note before I get into the analysis of the currency pair, one thing to note, of course, is that we have news out of New Zealand this evening, 6:45 p.m. Eastern U.S. time, GDP news out of New Zealand. Then shortly after that, we have Australian employment data. So you want to watch those pieces of news. Could have some effect on this trade that we're getting ready to talk about right now here on the New Zealand dollar. Anyway, starting on the weekly time frame, probably the most important thing is we've been in an uptrend, but take a look at the blue box at the top of the chart. We have found significant resistance at the top of that range or that blue box. Zoom it in and take a look at this. Right here where the black box is. 1 week, 2 weeks, 3 weeks, 4 weeks, big wick sticking up on top of the blue candle there. We see that large wick. Maybe looking at that as a shooting star candlestick. Could be evidence of reversal here for the New Zealand dollar based on what we're seeing here on the weekly. If that's true, we'd look for reversal indicators on smaller time frames as well. Let's take it on down to the daily time frame, and as we look at this, there's that blue box and there's the attempt to get higher, which caused that wick on the last week's weekly candle, and now we're back underneath it. Now take a look at the red trend line, a little bit of a shorter term trend within that blue box that we're looking at. If you take a look at the red trend line, zoom it in one more time, you can see rising from the low at the bottom, connecting with this low right before the high. So if we connect the trend line to the low and the low right before the high, we can see today we're just underneath that trend line. This is the first time we've been underneath that trend line since it's made the new high. So definitely something to watch there. Breakdown of the midterm red trend line. We've seen the potential shooting star candlestick on the weekly time frame. We're back underneath resistance. All of that giving me some clue that we might be looking for some reversal here for the New Zealand dollar. Of course, again, GDP this evening out of New Zealand could change all of that, but definitely something to consider is we're seeing evidence price action that could indicate potential reversal. If that's the case, we want to look for opportunities to go short, selling rallies to resistance or breakdowns of support. Let's take it down to the 4-hour time frame. So here's what I was looking at here earlier today. We hit the green zone, and well, first off, we hit the orange zone, came up to the pink zone, fell down off of there, hit the green zone, come up to the orange zone. Very similar situation, isn't it? Where it bounced the orange zone, hit the pink zone, and went down, bounced the green zone, hit the orange zone now. So now what are we looking for? We're looking for resistance here and for it to head back down at minimum to the green zone. If not, a breakdown of that green zone, we send it lower, even all the way back down here into the 7100. So selling rallies to resistance gives us an opportunity to trade in the direction of what could be a potential trend change here. Obviously, over the past couple of days, it's been very bearish here for the New Zealand dollar. Again, GDP could change that this evening. So selling rallies to resistance is really the main focus I have right now. It may change. It could start moving back up, break the orange zone. That's the risk in the scenario right now, is that it breaks the orange zone and goes back to the pink zone. And of course, above the pink zone, which it hasn't done since getting underneath it, we would look for it to go back up again. So selling this orange zone to me seems like the most logical trade scenario for the day today on the New Zealand dollar, targeting the green zone first, but beyond there, we'll look for it to go down. Let's see if we can get this blue zone grabbed and pull that over a little bit like this. So that would be our secondary target, would be the blue shaded area. That's into the mid 7100s. Beyond that, we would go even further down towards the 7100 low. I'm not going to take the time to drag that colored zone over, that yellow zone, but 7115, 7100 would be your next third target. So green zone, blue zone, then all the way down here towards 7100 on profit on the way down. So I've gone ahead and entered it. When it hit the 72.80 level, I went ahead and sold it at 72.80. You're pretty close to it. Any bump into 72.80, I think, today gives you an opportunity to go short towards the green zone or lower. And of course, the risk is just above that orange shaded area. You want your risk above there, because if it breaks there, you don't want to stay in it. Somewhere around 73.05, 73.10 would likely be a pretty decent stop loss. So you're only looking at about maybe a 30 pip stop loss on the trade for the New Zealand dollar short today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.